Good afternoon, everyone. Welcome to today's SBC's Knowledge Series, a webinar on New Labor Codes 2025. My name is Ravi Kiran. I'm your host for today. I'm a qualified chartered accountant, cost accountant, and a US CPA. I have over 28 years of post-qualification experience. I'm currently working as a partner at SBC, taking care of advisory and outsourcing division. SBC, or Steadfast Business Consulting, is a tax and accounting advisory firm based out of Hyderabad. We have over 250 employees working in India and UAE. So I'm really delighted to introduce our distinguished speaker, Mr. Naveen Balodia. He is an expert in tax and regulatory services with over 26 years of experience. He is a qualified chartered accountant, cost accountant, company secretary, and also an advocate, lawyer. He has unparalleled expertise in corporate taxation, cross-border structuring, and regulatory advisory across diverse industries. His deep knowledge of multi-jurisdictional tax frameworks, regulatory advisory, and compliance challenges makes him the perfect voice to guide us through today's discussion. Please join me in welcoming Mr. Naveen Balodia. Sir, over to you.
Thank you, Ravi. Thank you very much. Thank you for the long introduction. But yes, I'm still a student. I'm still learning the new regulations because the government makes sure that you never grow up and you actually continue to be students. So that's a good thing for us. What we plan to do today is to talk about the new labor codes and how would it impact corporates and businesses. So that's a broad thought process. And during the conversation, we are going to talk about overview. By now you would have already, heard about it a lot in the media, social media for that matter, but we'll just talk about it briefly. Some of the key changes that have come in, and then we'll talk about the way forward that you should keep in mind, and then finally we will also have an opportunity to raise questions and clarify doubts to the extent possible, depending upon the time, because we have 1 hour. If there are questions that remain unanswered, we will make sure that those questions are reverted to you on a one-on-one basis. So that's a broad plan that we have. As we go through this discussion, maybe just keep on noting down your questions. You can put it on the chat box so that we can have the interactive conversation towards the end of this discussion. Now, talking about the 4 labor codes. Okay. Now, these labor codes were passed in 2020. This is like pre-COVID time when the labor codes were all passed. They were approved and, assented by the president also. But they were supposed to be effective from a notified date. And we were all waiting for the notified date or the notification date. Finally, it happened on 21st of November 2025. So effective 21st of November 2025, all the 4 labor codes that we are going to be talking about have become effective. Looking at the framework of these labor codes, so effectively what the labor code does is that there have been different types of labor laws that have been in existence: Payment of Gratuity Act, Payment of Wages Act, different types of regulations or laws that were in existence. 29 of these regulations have been subsumed in these 4 labor codes. Interestingly, some of the important regulations that we keep on hearing about, like say, for example, the Shops and Establishment Act, and that's applicable across most of the states in our country, or for that matter, the POS related regulations. Now, these regulations will continue to operate as they were. So only the 29 regulations that have been subsumed in the 4 labor codes are the one that we would be focusing upon. Other than that, whatever continues, that continues even otherwise as it was earlier as well. Looking at the 4 labor code, there are a few theme items that we just identified. What is it that the 4 labor codes are trying to do? The first and the foremost thing is that they are trying to unify the definition. So in the previous era, when we had different regulations like Payment of Gratuity Act, Bonus Act, Provident Fund Act, there were different definitions for the wage or the base when we were trying to talk about for the purpose of computation of each of these elements. What this labor or these labor code intend to do is unify the definition across all the labor codes so that there is one definition, intended towards reducing the possible litigations as we move forward. So this is something which is important. The second important thing is that they are trying to make the implementation and the enforcement much more effective. So there are new concepts, and we will talk about it in our subsequent discussion. But there are new concepts which are trying to help taxpayer, rather companies, comply with these regulations, and they have mechanisms to ensure that the enforcement is done properly. There's a lot of emphasis on technology. Everything is supposed to be done online. So I think that's something which is going to be saving a lot of paper, as well as is going to be actually helping a lot of tracking for that matter. And the final element is the ease of implementation. So if you were to just look at the way the regulations, the 929 regulations put together, they were like approximately 31 types of returns that used to be filed. And depending upon which return or which particular law applied to a company, but there were 39 of them. Now going forward, there will be only one return that needs to be filed, which covers all those 29 regulations wherever they were applicable. There were approximately 8 registrations to be done. Now going forward, we will only have one registration to be done, and that's it. All the 29 regulations will be taken care of. Similarly, will be the situations for licenses wherever they were applicable. So that's a broad thought process that, okay, let's reduce the compliance burden. Let's make it technology driven so that tracking becomes easy. Life becomes hopefully simple. When we talk about the 4 labor codes, I think this is something which is important. The first one is the code of wages. So this is the one that talks about the payment of wages, the timing of it. It covers the Minimum Wages Act, it covers the Payment of Bonus Act, and it has elements like when the salary should be paid, what should be the timeline, how should the processing happen, and so on and so forth. So that's the first code, which is the code of wages. Then we come to the second one, which is the code on social security. This is the one which is right now, if you were to just look at the entire gamut of things, the most discussed one, which talks about, or which actually encompasses regulations like Gratuity Act, the ESI regulations, the PF law. All these have been subsumed into this. And this is something which takes care of all the retirement related payouts to an employee. And we are going to be discussing this in slightly more detail. The third one, which is the OSH code, as we call it, this is with respect to the occupational safety and health of the employees and the workers that have been working in a particular organization. So it has elements like, maternity benefit, safety committee, and then there are elements like health checkup that needs to be taken care of. And the last one is with respect to industrial relations. So that's something which takes care of everything to do with the labor, the trade unions, and related aspects of the factories for that matter. So these are the 4 labor codes that we have, which we need to be aware of as we move forward. Moving on to the next part, I think this is something which is most important, and when I do these conversations, I keep on hearing people saying that whether these labor laws have become effective, whether they will become effective from 1st of April, is it to be done from next year? So all sorts of questions keep on coming up. But the reality is that all these 4 labor codes have actually become effective from 21st of November 2025. So when we are discussing today, these regulations are already effective. There are conversations saying that, okay, the rules are not out as yet. Yes, some of the rules at least have not been out, or at least they are in the draft format, but that does not stop the implementation of these labor codes. So if we were to just look at the entire gamut of things, these labor codes have certain substantive provisions which are already approved, which have become effective, and which are not dependent on any rules for that matter. I'll give you examples like, say, for example, classification of a worker, or looking at the compensation of a particular employee and an individual. They are not dependent on any of the rules for that matter. And if that be the situation, they are going to be effective immediately. So they are actually effective immediately. There's a second category where we talk about some regulations which have become effective, but they are slightly dependent on rules, say the limit for the gratuity, okay, the overall limit. So that's something which is dependent on regulations or rules for that matter, and the rules have not been notified. Now, in all these situations, the way the regulations have been drafted, they say that whatever is the existing regulations, to the extent they are not contradictory to the code, that should become applicable. So say, for example, again, as I was just mentioning, gratuity, the limit of 20 lakhs exists in the current scheme. That is going to be applicable and will continue to be applicable till the time the final rules are issued. The third category would be like rules, some provisions or for which rules are required and the rules have not been notified as yet. So elements like the social security for the gig workers or the platform employees, for them the scheme has to be notified. It is a concept which has come for the first time. There is a scheme to be notified. For those situations, yes, it will become applicable only at the time when the rules are out and when they have become effective. But other than that, all other situations, the rules or the code has already become effective. This is something which is very important. And the central government has time and again indicated through various frequently asked questions, clarifications, that these regulations have become effective from 21st of November 2025. Couple of additional points that I just wanted to bring up was that the Institute of Chartered Accountants had issued a guidelines to the auditors in February 26, which is just the last month, saying that when they are looking at the financials for 31st of March 2026, they should look at and comment that whether the company has considered and evaluated and finally considered the impact of labor code in their financials. So that's something which is important. ICI has given this in direction, and the auditors would be looking at your financials and they would be asking you this question as and when the financials are getting prepared for the March 2026. Okay, I think there's some problem with the screen, looks like. Just give me 1 second.
For the participants, if you have any questions, please type in the text box.
Okay.
We'll take all the questions.
Okay, sorry, I think there was this. Yeah, Ravi, you were saying something.
Yeah, I mean, a few people are raising their hands, so I'm just telling them that probably in the end we'll have a Q&A sessions. Whatever questions you have, you can type in there so that we'll address some 5 to 8 questions, and the others probably we'll reach out to them individually.
Sure. Okay, so I was talking about the Institute of Chartered Accountants. So I think that guidelines have already been issued, and as we look at the large companies, the listed companies, they have already taken the impact of the labor code, in their financials, specifically the listed one in their financials for the third quarter. So it is important that we make sure that the impacts are understood and they are accounted for in the financials. The last point on this particular topic that I wanted to bring up was that there are, going forward under this code, there are stringent penalties. So the minimal penalty works out to 50,000 rupees per default, and there would be some rolling penalties as well. So it is important that we now start looking at it much more closely so that there are no defaults and there are no situations where we end up talking about penal consequences. Now, if the regulations have become effective, what are the areas which actually has a lot of impact, or the ones that you should be focusing upon from an attention perspective? I think the first and foremost element is that we need to look at that whether any of our team members or any of our people qualify as workers. So there's this concept of worker and then concept of non-worker. Now, this is something which is an important classification, because this classification will actually help you identify that which all regulations are applicable to your organization. It's slightly different as compared to the way it existed in the previous regime. If you're talking about, say, for example, a of a normal software company working in a particular city, they would straight away say that, okay, the industrial regulations are not applicable to me at all, because we are a software company, we are operating in a particular setup, maybe in a city, and there are no hazardous chemicals or activities which are being performed. But now going forward, the definition of worker is very, very specific. And accordingly, even in software companies which are working in cities, there could be people who may actually end up getting qualified as workers. The moment that happens, a lot of regulations will become applicable to your organization. So that's something which is important. The other important area that we need to look at is the definition of wages. We talked about the unification of the definition. The definition of wage is one of the most important concept that creates or actually has impact on the financial liability of a company. And we will talk about these two concepts in slightly more details in the subsequent discussions. And when we look at these two, there are additional costs on account of social security, retirement benefits. There will be some additional HR related, payroll related compliances that will get enhanced. There will be payouts in the form of, say, overtime to the workers. Your entire infrastructure, IT infrastructure, is something that may need to be modified or at least adapted to these regulations, because your payroll, the way you are recording your leaves, all these things may have to be taken updated. The HR or the people related policies and procedures that we have, this is something which is a very, very important area, because the new codes talk about few concepts that were not known in the previous regime. And to that extent, it is important that your policies are updated and these concepts are built within the element of these policies. And then finally, we talked about the enforcement part already, so we need to be careful on that. To sum up, the areas that we need to address is, the first one, of course, is the cost of employees, the employee cost or the salary cost. Then there is an impact on the profit and loss account that needs to be evaluated and factored in as a provision in your books of accounts. The non-compliance risk is pretty high. And while we are doing all this, we also have to take care of the interest and the satisfaction of the employees, because this is, at the end of the day, a very, very sensitive topic for the employees as well. So a lot of work to be done. Now let's go to the concepts, because this is something which is more about the ecosystem. But now let's move to the important concepts. The first one is the classification of worker and non-worker. And this is something which is really, really important. This is going to be the first step in your journey as you navigate through the ways through these labor codes. When we talk about this definition, the way the definition is included, it talks about that worker includes a person engaged in manual, skilled, unskilled, technical, operational, clerical, or supervisory work. Now, the first 6 elements are something that we are pretty used to from a worker perspective. But the last one, which is the supervisory category, is something which is important. And then the regulation goes on to say that it does not include, or it excludes rather, managerial or administrative roles, and then supervisory roles drawing wages up to 18,000 rupees. So 18,000 is the notified limit right now, and this is subject to change. So going forward, this amount can actually get modified. So to that extent, the last 2 exclusions are something which is very, very important. If the person is not or working in a managerial or an administrative role, he should be excluded. And if he is working on a supervisory role but drawing a salary of, say, above 18,000, he will be excluded. Other than that, all other people will get included. Now, the concern here is that if you just look at your entire population of employees, the people who are working to at the lower end of your pyramid, these are people who typically may not be supervising anyone. They may not be working on a managerial or administrative roles. They would be individual contributors. And these are people that actually can get qualified as workers. And that's the reason, this definition is something which is very, very important, and it needs to be looked at very, very closely. The second important thing is that when we talk about this threshold of 18,000 rupees, this is only with respect to people who are in supervisory role, and it does not qualify the managerial or administrative role. So that's the other important element that we need to keep in mind. Based on this, the first step that we need to do is we need to classify our entire population to check whether any of our employees fall under the category of worker or not. And this is more relevant for organizations which are working, say, in cities, software companies, service companies. It's very, very important, because the moment any of these employees get qualified as worker, a lot of additional regulations will become relevant and applicable. And as I was indicating, it is important because there are certain specific regulations that become applicable only to workers. Like, say, for example, there's one restriction that talks about that you cannot employ contract laborers for your like core activities. Now, this is something which is important, but this is something, again, at the same time applicable for workers only and not for your normal employees. There's a concept of this overtime payout, that every time, if there is a standard timeline of 8 hours per day and 48 hours per week, and if there is anything which is over and above this, that time has to be paid as twice the wage. Okay. But again, this is something which is applicable for workers, not for non-workers. There's a third very important element, you would have heard about, that you cannot carry forward the accumulated leaves beyond 30 days. Now, this is something which again is applicable to workers and not to non-workers or ordinary employees. And of course, regulations like trade union, etc., they also become relevant only when the person or the team qualifies as workers. When we talk about this qualification or the classification, this is something which is important, because in case there are any misjudgments or any decisions that you may have taken based on the job profile of a particular person, that actually can create difficulties in future in case the regulators were to come and ask these questions. As I indicated, right now they are talking about implementing it, but going forward there will be situation where they will start making sure that these implementation of these regulations is done in a very, very stringent manner. So this is as far as the definition of worker and non-worker is concerned. Now we move to the next one, which is the definition of wage. This is one of the most important changes that have been brought in, the definition of wage. And we need to pay a bit of an attention here, because during discussions with a lot of clients, I have heard people saying, as long as my basic salary for all my employees is like 50% and above, I should be okay. Answer to that probably is not a complete yes, because the way the definitions have been given, the definition of wage has been given, it has been compartmentalized into three broad baskets. So to start off, the definition of wage is an inclusive definition. It says that wages means, and it includes basic pay, DNS allowance, and retaining allowance. So this is an inclusive definition. And as you would have seen in the past, inclusive definition is a wide definition. It can actually include other elements also other than what is already specified. So this is the first limb of the definition. The second limb of the definition is that there are certain specific exclusions from the definition or the ambit of wages. So there are these 11 items which have been specified, and this is an exhaustive list. So only these 11 items, whatever falls under these 11 items, can only be taken out from the definition of wages. So that's the second limb of the definition. Then we come to the third limb of the definition, which says that in case of any employee, if the excluded items, the second category that we just talked about, if this is more than 50% of the overall remuneration, then that excess will be ignored, or it will be added back to the element of wage, the first bucket that I just talked about. So effectively what we need to do going forward is that we need to concentrate on the exclusion category rather than the inclusion category. The moment the exclusion category is say 60, in a situation where you have a remuneration of say 100 and the exclusion category is 60, the differential, the 10, which is in excess of 50%, will actually get added back to the the wage definition, and as a result, your wage for the purpose of all your retirals will actually become 50. So we need to focus more on the exclusions rather than the inclusions. And that's the way, that is something which is important as we go about looking at our compensations, our team's compensation, the way the retirals will get calculated. And as we are approaching 1st of April and a lot of organizations revise their compensation from April onwards, when you are looking at the new compensation for your employees, this is the time when it can be looked into and reorganized. The third or the last basket that has been covered in the definition of wages is that in case there are any element of the wage which is given in kind to the employee. Okay. Now, if that if there's an in-kind payout, then only 15% of the overall amount. So the value could be whatever, but it would be restricted to overall 15% of the total wage payable. And that is something which will actually be important if there are lots of in-kind benefits which are given, because at the end of the day, only 15% of it will be counted towards wage and not beyond that. So based on this detailed definition, it is important to look at the compensation elements very, very closely, because this is something which can actually impact the retiral payouts to your employees, to the staff, and it can actually increase the liabilities substantially. And whatever I just talked about, we will just look at it by way of a numerical or a small brief example. So if you look at this particular illustration, and you see the scenario 1, where we are talking about an individual whose salary is say 1 lakh rupees with elements like basic, HRA, conveyance, and special allowance put together. So 40, 20, 10, and 30. So that's the compensation or the remuneration of that individual. If I were to just go back to my definition, and I see here, I have house rent allowance as an element that needs to be excluded, and conveyance allowance is one element that needs to be excluded. So these are the two elements which are reflected here also. So HRA, which is 20,000, and conveyance, which is 30,000, so 10,000. So altogether 30,000 is my basket for exclusion. Now, if that be the situation, my overall exclusion is less than 50%. And accordingly, I don't have to do any adjustment. My wage for the purpose of all my retirers going forward, as given in this example, will be 70,000 rupees. Because my exclusions were less than 50, there was 50%, there were no adjustment required in the compensation or the wage definition. And going forward, 70 will become the base for all my calculations, be it gratuity, be it provident fund, be it ESI, everything put together, 70 will become the base. Looking at the second scenario, similar sort of a situation, 1 lakh rupees salary, basic is 40,000, but HRA has got increased to 30,000, conveyance to 25,000, and then there is a balancing figure, which is the special allowance of 5,000. So put together, it comes to 1 lakh. Now, if we were to just look at the amounts that are getting into the basket, which is like the exclusion basket, HRA and conveyance put together works out to 55%. Now, of 55,000. Now, when we look at this, this is something which is actually more than 50% of my overall remuneration. And if that be the situation, if you see the box that I have, the conditional inclusion element, which is 5,000, which, the way that is calculated, 50,000, which is the specified exclusions, minus 50%, which is 50% of the remuneration. So that's the condition inclusion. And this is something that needs to be added to my compensation. And accordingly, my overall compensation in this situation, overall wage for the purpose of all my calculations, will become 50,000. Because had you excluded that, your overall wage would have become 45. But because of this conditional inclusion, it has actually now come back to 50. So this is the way the interpretation of the definition needs to be done for all our employees as we move forward. This is a general example that we have tried to create. Now, we have taken certain assumptions here while we are doing it, and these assumptions may not be true in all situations. So the only objective of this particular table is to indicate that how much difference can or the change of the definition can create on the overall retiral. So if you see the first, third row, or rather third column, we have this overall compensation as 24 lakhs. And for our existing regulations, the overall base for the purpose of gratuity would have been 8 lakhs. And the last row, if you see, the overall gratuity for a person who may have worked for 10 years typically would have worked out to 3,84,000 rupees. As compared to that, the same individual, same structure, just because of the change of definition, the overall gratuity now can actually, under the new code, actually will become 6,89,000. So, pretty much like, wide difference or change in the overall liability. Of course, as I indicated, we have taken certain assumptions here. Those assumptions need to be verified in each cases. So the difference may not be as wide, it could be slightly lesser, but this is the potential difference that can get created. And this is just an illustration for explanation purposes, so that you can look at the overall compensation of your people as you move forward. So this is as far as the definition of wage is concerned. Now we move to the other important changes that have been brought in by the regulations, and these are equally important. The first one that we thought would be relevant is that the compensation or the salary or the wage needs to be paid to an employee by the 7th of the next month. I think this is something which is important. The previous regulation talked about 10th of the next month. Now we are talking about 7th of the next month. But the next point is the one which is more important. In case of any person leaving the organization, either by way of resignation or termination, the full and final settlement of that individual has to be done in 2 working days from the last day of working. And I think this is something which is important, because you'll have to plan it out in a manner that if the regulations require a 2 days window, the full and final is completed within that timeline. So this is something which will put in pressure onto the way your full and final are done for your employees. The second important change is, a lot of people, because of the change in definition of wages, a lot of or additional number of people will actually get covered under the ESI regulations. And the reason why this is important is HRA earlier was considered as a part of wage for the purpose of ESI. But under the new definition, HRA is something which is excluded from the definition of wage. So as a result, there will be a lot more additional people who will fall under ESI regulations. And when we talk about ESI, if you just look at the 2 combinations, the employee has to give 0.75%, employer has to contribute 3.25%, put together 4%. So there will be an impact of 4% based on the way the compensation has been structured. One important thing is that, the regulation specifically says that you cannot actually recover any past due from your current wages. So in a situation where you have like these low-end employees to whom the ESI may become applicable, there will be a difficulty in recovering that the 4% additional cost also from the employees, and it will typically become the cost to the organization. The third important element is social security scheme for gig workers, for the platform workers. Nowadays we very regularly see people around, like, Swiggy, Zomato, all these people, they are actually gig workers. For them, there were no social security which was there. The government is bringing in schemes to make sure that there is social security for them as well. There will be schemes that will get notified for these people. This is for the unorganized sector, completely unorganized sector. So there will be scheme that will be coming in, but we'll just have to wait for the final document to come out. The next one is something which is again very important, which is the gratuity for fixed term employees to be due in 1 year. So in most, in normal employee situations, when we talk about a timeline of 5 years. So gratuity becomes due only after 5 years of completed services. But now if you talk about a fixed term employee, the gratuity will become due in after 1 year itself. And when we talk about these fixed term employees, these are people like, who have a specified start date and a specified end date, typically relevant for like say the expatriates who come in for say 2 years or 3 years. In their employment letter or their secondment letter, there's a specific mention that your tenure is going to start on a particular day and end on a particular day. So if that be the situation, these are people who will qualify under the fixed term employee or employment, and for them gratuity will become due within after the first year itself. And as we move forward, once it is notified, there will be requirement of compulsory insurance for all gratuity funds. So a lot of organizations nowadays, what they do is, their gratuity fund actually is an unfunded one. They create a provision in the books of accounts, but it is not funded. So they don't spare or keep the amount separately for the purpose of funding gratuity in the future. Now, going forward, this is something which will become mandatory once the rules are notified. The employer will actually have to separate out and keep some amount into insurance policies so that gratuity could be paid as and when a particular employee departs. Crèche facility for establishment, with 50 or more employees, this is something which is important. This was, in some form already there in the previous regulations also. It is important that the crèche facility is provided and it is within the vicinity of 1 kilometer from the place of work, the establishment. It is to be provided for all children who are like 6 years and below. What employers can do is they can pool in, and it's not necessary that you need to create a crèche of yourself. You can pool in, and it would be a common area where the crèche facility is being provided. So that's something which is doable. But this is something which we need to make sure as we move forward. The next one is that every establishment will need to issue an employment letter in a specified format, or at least having specified details. A lot of these low-end employees or employees who have been working for say a small tenure typically may not be getting an employment letter. Going forward, this is going to be becoming mandatory. What is very important is that all the existing employees also needs to be issued the employment letter in the new format, within 3 months once this rule becomes effective. So we will have to prepare for that also. So even if we have like 500, 1,000 employees who have been working already in the organization for years, we will have to issue a new employment letter to all of them in a specified format. And of course, as the revision happens going forward every year, this is something which is going to be an important activity of, once the rules get notified. And there will be more accountability for the principal employees in case of contractors non-compliance. So in case there are contractors who default onto their filings, their obligations, the main contractor becomes responsible. Some additional changes that are very, very important. We will try and this points or cover all these points also. The first one, cannot deploy contract labor for core activities. This is something which is very, very important. But as I indicated earlier, this is relevant for your worker category only. Medical health checkup for all employees. This is for the purpose of this preventive healthcare, more to take care of that in case there's any particular ailment, at least more of a precaution rather than anything else. So any employee which is more than 40 years of age, there's a mandatory health checkup to be done by the employer on a free of cost basis. The third one, which is the leave part, which I alluded earlier also, is that in case of workers, the accumulated leave cannot be more than 30 days for any particular individual. Okay, and this these accumulation has to be done on a calendar year basis. So the reference point will always be the calendar year. 30 days, more than 30 days, you cannot actually accumulate these leaves. They will either have to take it, or there is an option that needs to be given to these workers to encash the the accumulated leave. This is again which is very important. Overtime to be paid, and the overtime will be at the rate of twice the amount of normal wages. And as I indicated earlier, 8 hours is the per day sort of a tenure that they have talked about. 48 hours for the entire week. So anything which is beyond this, overtime has to be paid to those workers, and consent has to be taken from them beforehand. So this is something which is again important. It is not only important to pay for the overtime, but the consent is also important. The next one is a new, or rather a couple of these elements are new concepts as far as the labor laws are concerned. Compounding of offenses is something which has come in the labor codes for the first time, and so has been the case for improvement notices. Compounding, as we talk, all know, it's more like if there's a imprisonment or some sort of a criminal liability, it can actually be compounded by payment of a particular amount, typically 4 times the overall amount. So that's the concept which is there in, say, tax regulations, and that is something which has been brought into labor law as well. And since the government intends to make sure that the employers comply with the regulations, the first step will always be an improvement notice. So if there's a default which is identified, the government intends to send out an improvement notice saying that we have identified this, or we have come across this, maybe this is an opportunity for you to improve and take things forward, so that no penal action are taken against you. So that's something which is a welcome move. The next one is the reskilling fund contribution. This is again very, very important because every time there is a retrenchment that happens, retrenchment means forced exit of an employee, the company will actually have to deposit 15 days wage into this reskilling fund, which will be maintained by the central government. And this deposit has to be done within 45 days of the last day of that individual. The overall objective is that this reskilling fund will be used to train those people so that they can become employable as elsewhere or in the future. And then the last point here is that I did speak about this earlier also, single establishment registration and unified electronic returns. So this is something which hopefully will make life easier once they become fully effective. This is just an indication the way the regulations have been drafted. All these labor codes or the provisions under the labor codes will become effective with the increase in the number of employees. So if you say zeros, rather it should be the one employee at least. The code of wages, which is the time of payment, the salary slip, all these elements will become applicable the moment you have even one employee. The moment you have, say, 10 or more employees, additional regulations like gratuity, ESI related matters, maternity benefit, they will all become applicable. The moment you have 20 plus employees, provident funds, factories, regulations around that, redressal cells or committee, these regulations will become relevant. If you have 50 or more employees, the contract labor provisions get triggered. We talked about the core, non-core, and then there are other elements also, like what are the privileges of a contracted labor, and what are the responsibilities of a principal employer. All those will get triggered the moment we have 50 or more employees, or rather 50 or more workers. And then as we move up the ladder, 100 employees, industrial code will become applicable, works committee becomes relevant. And the moment we have 300 and more employees, I think this is where you'll need a lot of approval from the government. If there's a retrenchment, layoff, etc., if there's a decision to close down, a lot of additional approvals and processes to be followed. So, the context or the crux of this discussion or this particular point is, as you move up, more and more regulations will become relevant and applicable to a particular organization. Now, if we have all these changes that have come in, how do we now navigate our way through them? How do we deal with it? Because we are on the one side, we are saying that these regulations have become effective from 21st of November. We are sitting in the month of March. Our books will get closed on 31st of March, most situations. How do we go about it from now onwards? The first thing that we need to look at is to do a impact assessment of all the retiral benefits, because that's the one entry that you will have to consider and keep in your books of accounts as on 31st of March 2026. And in order to do the financial impact, you will have to undertake the classification of worker versus non-worker. So that's the first important step. you will have to do a classification of the existing remuneration based on the definition of wage. So which element gets classified as included, which one gets classified as excluded. And then there are certain government regulations, clarifications also that came in. Like say, for example, one of the FAQs that the government issued, it says that if there is an element of, say, reimbursement, which is included in your compensation, that will not get included into the basket of wages at all. So this classification of wages or based on the definition and the classification of worker versus non-worker is very important. Based on that, you will be able to identify the overall financial impact on account of all these employee benefits that you have. This is your first step, which is important. Having done that, if you find that yes, there is additional impact which is coming in, and since we are sitting in the month of March, it is important for us to relook as at the compensation structure as we move forward to the next financial year. So you may actually have to do a realignment of the structure. You may have to realign maybe the values so that the overall impact, at least in the next year onwards, is not that substantial. So that's a second important activity that is very, very important. The third important activity is that, look at all the contracted or the third party employees, because as we discussed earlier also, there are additional responsibilities in case of third party or contracted employees for the principal employer if there are defaults by the contractor itself. So it's important that we relook at it. This is important, from two aspects. One is the liability perspective when you talk about legal liability. The second is that you may actually see your contractors coming back to you saying that, okay, the overall cost of my employees have gone up because of the reclassification of the definition. Accordingly, he would want to renegotiate the rates. So that's something which is very, very relevant and contextual from a business perspective as well. The fourth important activity that you need to keep in mind is look at the policies and the procedures that you have within the organization. Make sure that whatever is required by the regulations, and when we talk about regulations, we are talking about all four. Whatever is applicable, they are included in your policies so that in case at any point of time, any regulator comes in, a labor inspector were to come in, there is a clear coverage of these policies or these requirements into your policies. This is something which will be also very, very important. And last but not the least, whatever we are doing it for the employees. So it is important that they are informed, they are kept informed, they are aware of what is going on. If there is a change in compensation, they exactly know why it is happening. And the training for the stakeholders is something which is very important, because one incorrect statement or one incorrect communication can actually create unnecessary unrest amongst the employees. So this is something which is again very important. Last one, proper communication to the employees, and this is something which should be done properly. And this is going to be more like a continuous process. So we'll have to do the impact assessment. We'll have to look at what needs to be done. It has to be implemented and then finally revalidated also, just to make sure that it is working properly. So this is the broad, sum and substance of things that we need to do as we move forward to take care. Honestly speaking, when we talk about these labor codes, even now we are learning, we are trying to get answers. Not that we have all answers, or for that matter, no one would actually, even the government would not have all the answers. There are clarifications that are coming in. There are pointers that are getting clarified. But yes, within the ambit that we have, it is important that we start moving forward, because the regulations have already become applicable from 21st of November 2025. So I think that's all that I thought would be relevant from my perspective. Maybe, Ravi, we can take up some questions, that may have come into your chat box.
Sure, sir. Thank you. That was really informative and insightful, sir. I think given the short amount of time, you packed in really well and you covered, I think, everything. I'm sure it will be a very good starting point for all the participants to explore further and implement it in their organizations. We have about 28 questions, I think, but in given the amount of time we have, probably I'll pick 5 or 6 max, and the others probably will try to reach individually and connect with them with the answers. The choice is to pick which are applicable for most of them. The specific questions, I think I'm leaving here, and we'll reach out to them directly. It says, since labor code is employee related, my HR team should be taking care of this, or would it be the area of our legal folks?
No, that's a that's a very important question. Yes, it is labor code, Ravi. There's no doubt about it, but it actually has impact on various areas. So it will have to be a teamwork between your HR folks. You will have to involve team from your finance team members. Like, the finance team has to be involved in it because they are the people who will be the custodians of the financials. The legal team will have to come into play because whatever contractual elements that you have, in case there's any modification to be done or the policies to be changed, even the employment letters. So all these things has to be taken care of by the legal folks. And then finally, even the IT team needs to be kept in the loop, and they need to be a part of this discussion because some of the elements of, say, recording of the leaves, the way things are being carried forward, the way they are recorded, that needs to be taken care of. So it's not going to be any one individual's responsibility. It will be an responsibility of the organization, and all the 4 teams, at least the 4 teams that I just talked about, will need to come together to make sure that this gets implemented properly.
Okay. So the next question is, an employee resigned and left our company on January 31st, 2026. We paid gratuity based on the existing structure and understanding. Do we have a risk? What should we do?
Okay. I think this is a very practical question, Ravi, and I understand that if the employee has already gone and the gratuity may have already got paid. I'm not sure whether it is paid or not, but the way the regulations are, since the person is actually leaving after 21st of November 2025, when the regulations have become applicable, post that, all calculations of gratuity has to be done based on the definition, after 21st of November 2025. So in your situation, in the given situation, Ravi, the company has an obligation to make sure that the gratuity is paid as per the new definition and not as per the old definition. So if the amount has already been paid, then the additional amount needs to be either paid, or at least a provision needs to be created so that as and when the employee comes back, because nowadays employees have also become pretty informed. So as and when he comes back, that amount could be paid to him, or maybe you can choose to just pay him upfront. But from a regulatory or a legal perspective, the liability will have to be calculated based on the new definition of wage and not the old definition.
Okay. Thank you, sir. The next question is about overtime. During the end of the financial, I think we all go through this thing. This particular scenario, we all have experienced it in the past. During the end of the financial year, we need to finalize our balance sheet accounts, and my team end up working for 12 to 16 hours. Is it part of the KRA? Do I need to take consent from them, or do we need to pay them the overtime payment?
I think very, very, very valid concern. I think the way we will have to look at it is, as I had indicated, the overtime provisions are applicable to the workers and not to the non-workers, the balance employees for that matter. The way we will have to look at it is, go back to the last slide that I just talked about, start off with whether they are getting qualified as worker or are they getting qualified as non-worker. So that's going to be the first starting point. When we talk about a normal finance team member, most of them, or at least a majority of them, actually will get qualified as non-workers. So for them, this overtime rule will not become applicable. But in any situation, if the individual gets qualified as a worker based on the definition that we talked about, then definitely this provision of overtime will become relevant. And it is not relevant for us to see that whether he's working in a corporate office or he's working in a city or he's working in a factory. Irrespective of that, if he qualifies as a worker based on the definition that we have, the overtime payout and the consent element will become relevant. Maybe the consent element is something that you can maybe make it a part of your employment letter going forward, that if there is a need or there is a requirement of business, the person gives consent to work overtime. So at least that consent part is taken care of, and then you'll have to do a calculation of the overtime payout and pay him if he qualifies as a worker. Ravi?
Yeah, the next question is about number of employees. We always give letter of employments to our employees, and we have more than 1,000 employees. Do we now need to give new employment letters to all these existing employees again?
Yes, unfortunately, the answer is yes, because what the code says is that the employment letter needs to be in a specified format. And it actually goes on to talk about or clarifying that with respect to the existing employees, we have a window of 3 months. Okay, once the rules are notified, we will have 3 months to actually issue a fresh employment letter to all those people also. But to answer the question whether we need to give it to all the existing or all the old employees, answer is yes. But we will have that window of 3 months available within which it can be completed.
Okay, so our company has about 86 employees and based out of Hyderabad. We work on AI development. If we do not have, if we do not do anything under the code, is there a real risk for us? I think if they don't want to implement the new labor code, what will be the risk or something like that they're asking?
Understand. So I think this is important, but unfortunately, it's a regulation, and as advisors, as consultants, we are very clear on this, that non-compliance is actually not an option. If you're working within the city, that's perfectly all right. You may be working on AI, that's also perfectly all right. But the labor codes, all the 4 labor codes for that matter, would get applicable to you. You will have to do that classification part and then make sure that at least your policies and procedures are in place. If you don't want to modify on your or do anything as far as your increased liabilities are concerned, that's completely a decision of the organization. There will be increased liability as and when the employee retires or leaves the organization. You don't want to modify the compensation, again, not a problem, not a mandate, but there will be increased outflow as you move forward. But as far as the policies and procedures are concerned, that definitely is something which is important and that needs to be complied with.
It looks like many software related questions. I mean, most of them are from software background here, the finance people. Another software company related question. We are a software company and have hired 14 contractual persons for development of software. Do we need to take them on our payroll mandatorily?
Okay. I think what will be important to see again here is that whether these contract employees, first of all, are whether they are qualifying as worker. Are they people who are like individual contributors and just there at the bottom of the pyramid, or are they also doing some managerial and administrative roles? The crux of the answer will be based on the classification of that particular, those relevant employees, because unless and until they get qualified as worker, this restriction of not working on the core activities, etc., will not get triggered in. So in this particular situation, you have to see 2 things: the activity that they are working on, whether it is core or non-core. My understanding, if they are working on the development part, it will be like core activity. Then we'll have to actually go and identify whether these people are getting qualified as worker or not. If they do not qualify as worker, then there is a fair chance that you don't have to take them on payroll. You can continue with the way the model is. And if they get qualified, then yes, we'll have to just see that whether there is a requirement to take them on payroll or not. So that's something which we'll have to see, Ravi, on a specific case situation.
To stick to our timelines, I can squeeze in one more question, sir. I'll ask this. I think this is more generic. We pay soft furnishing reimbursements and uniform allowance to our employees. Will this be treated as included of or excluded from the definition of wages?
I think this is a very practical question, and so the way the definition is worded right now, it actually does not fall under the excluded category, strictly speaking. Okay, and this is something which was a concern and pain of the industry as well. They raised, or they actually made representations to the government, and the government came out with the frequently asked questions, and they actually clarified a few pointers. One of the clarification was that in case of any reimbursement being paid to the employees, it will not, get into the basket of wages at all. So that's the clarification that the government has given. Okay, and based on that, the interpretation that can be taken is that if there is a reimbursement happening, then it should fall outside the ambit of wages altogether. Okay. Honestly, if I were to just look at it, maybe the government may come up with some additional clarification that whether they intended, even remuneration getting paid in the form of reimbursement and not getting qualified as wage, that still we'll still have to see. But as the situation stands today, based on the clarifications that the central government has issued, reimbursement will not get qualified or not fall under the definition of wages. So they will actually not even come into your overall calculation. It will be completely outside.
Thank you so much, sir. I think these are the questions we could cover within the time. For all the other questions, we'll reach out to them individually. And thank you so much. I know we just scratched the surface of an iceberg, tip of an iceberg, and there's a lot to dig deep into this topic. It's very early for everyone because most of them don't even know what's there in the act. But this gives us a very good platform to start exploring further. And I really thank all the participants. Thank you for your patience waiting for the entire 1 hour. And we'll reach out to you individually, whoever has asked the questions and whom we could not answer, whom we could not fit it in this short span of time. Really appreciate your time. Thank you, sir.
Thank you. Thank you very much. And thank you, all of you, for joining.
So with this, the webinar is concluded. Thank you so much.